I am all about unfair advantages in this crypto game, and one of my absolute favorite unfair advantages is being able to spot certain patterns that Bitcoin loves to repeat so I can rip quick, big profits in this game. And this is something that you already know I'm no stranger to in this crypto market. A couple of the big positions that I've told you guys about in the last bit throughout this market have been absolutely huge. Here is a look at my Bybit account with me scrolling on it and, just tapping around so you know that this isn't just a screenshot, because a lot of people worry about these kind of things. And we've got over 1,600% profit there on Bitcoin and over 600% on my Tron position. And those are just a couple of them. Absolutely beautiful stuff. And the way I'm able to kind of pull off gains like this, or buy some of the nice toys that I've shown on Twitter and stuff like that, is, a big part of it has been the trading that I've been doing. And a lot of it has come down to identifying patterns that have worked out really well for me. So I want to break this down for you in today's video, really give you the secret sauce. And as usual, I don't want anything from you other than for you to smash that like button up, show this video some love, and make sure you are subscribed to the YouTube channel. Before we continue, I'm going to be talking about Blowfin exchange during this video, where you can sign up and start trading with no KYC. That means no picture of yourself or your ID, and you will win thousands of dollars in bonuses literally just for depositing and starting to trade on this platform, which takes less than 2 minutes. You can do it right now and get started. And it's not like a chance, it's a guaranteed thing. Based on what you trade, you get paid extra money to trade with, so it shortcuts your trading journey. And I'm all about spotting patterns here, so that's the first kind of key thing I want to start off with. And in my opinion, the absolute most reliable pattern on Bitcoin is going to be the triangle. And there's a lot of different ways that triangles present themselves. I'm going to show you a couple of them right here. To me, this is absolute gold dust. I'm actually starting the video off with the most important one, which I know I shouldn't do for the algorithm, but here we are. We're doing it anyway. You guys are going to get a treat here. And what I want to focus your attention on is this market here, but there's so many more, and we're going to talk about all of them, or many of them. We can't talk about all of them in this video. And it's all about kind of identifying that Bitcoin oftentimes loves to establish floors or ceilings, and also then, supports that kind of trend up, or resistance levels that trend down. And these actually give you a strong indication of where the market can go, because typically if you're seeing a descending triangle where it's kind of pushing down, you're typically actually going to be moving downwards. But if you see an ascending triangle like this where it's actually pushing up, you are typically going to move upwards. And your chance of doing that is 66% of the time. When you're trending down, 66% you're going to move down, and then 66% over here that you have a chance of moving upwards with these kind of patterns. And there's a few different ways that we can validate them and really take advantage of them, and there's a lot of different ways we can trade them as well, which I want to show you. Some of it is even relevant to where we are in the market at the moment, which is super fun. But the first key thing that I actually like to do is kind of consider how well spaced out our hits are of these levels, right? So I want to focus your attention on this one up here because it's a much easier kind of triangle to read. And what we can see is that we've got our support level down here with a nice few kind of hits of support. And we can see that there's a nice gap between each of these hits, right? We got 83 days over here, 135 days, 50 days, down to the next one, 57 days. It's nice. It's spaced out. We're looking at, a couple of months between each hit. In terms of resistance, we're looking at something similar. We got 21 days here. We got 57 here. We got 78. We got 38. And then over here, we got 66, right? So really nice, kind of broadly, kind of equally spaced out, nice bits of time between them. We're not looking for support levels that we're like, like rapid fire kind of hitting those levels, because those levels, you can't really trust them. They're not like actually proved across time. In our experience, we know this with mind the hair. We know this with Bitcoin or, other assets that, if the price action is too ADHD, you don't really trust it. You want to see things kind of spread out across time, developing, proving themselves to you, and then you can kind of feel confident to put your money behind them. And so with these kind of patterns, you get a lot of opportunities to trade. When you've been able to identify the support, you got two levels that draw a line, the third level validates it. It becomes very predictable to kind of buy off these kind of levels. Over here, you got 30% upside with only 5% risk, which is super digestible, very easy to make this kind of trade. And again, I think with 5% risk, that's a comfortable kind of 4 or 5x leverage. Even up just 30%, let's say that you don't manage to close the whole move, with 5x leverage, that is still a 150% profit. Okay, so if you put in 10,000 over here, you walk away with $15,000. No, what am I saying? You walk away with $25,000 if you were to kind of make this type of trade with 5x leverage, because you're actually multiplying your reward by 5, and so a plus 150% gain is a 2.5 times increase, which is absolutely amazing, right? And with this kind of risk, there'd only be about 25% to lose, maybe up to 30% if you got a wide stop loss. So that stuff works out pretty well. Obviously, what I'm describing right now is leverage trading, which is super dangerous. It doesn't work out for most people. You really need to know what you're doing, but this is what I do. It's what a lot of other people do in the market. It's worked very well for me. It's worked very well for people that have been in my group and been watching this channel and stuff like that. On the whole, super dangerous. You got to keep that in mind. But if it is something that you think you'd be interested in, or especially if you've kind of done it before and you're experienced, then like I said, Blowfin's a great place to be. There aren't many exchanges that offer what Blowfin offers at this stage, that are not shady. Most of them are very shady, but Blowfin's kind of, built their own tech. It's all proprietary for what they've got here, which I think is very important. And to me, I've been in this space for over 7 years. I feel like I can kind of sniff out now what's legit and what's not. And that's why for me, my favorite exchanges remain these top 2 links here, which you can find in the description. And obviously, always being mindful of your country's local regulations. Now, let's continue on here. Not only do you get the opportunity to kind of buy these levels, you also get the opportunity to sell the resistance level in this case, which in my opinion is a much more obvious trade. It might be a little bit harder to set stop losses on these kind of trades, but you've got a lot more downside because you're always anticipating that the market can drop. With these kind of positions, you have to get out because you're going to get back down to break even or worse afterwards, because it's a descending triangle, so you're anticipating 66% to the downside. But on the but if you're trading the downside here and you're kind of anticipating that the price is going to be pushing down, then actually you don't really have to worry about the price going too far up. It's just going to invalidate your trade, but you have a lot more downside that you can actually experience, right? And those of you that were actually watching my channel back here, you're going to remember that I actually went short right down here, and I actually made a 60% profit, which is bigger than the entire move. The entire move is 52% profit. I made 60% just trading it late as well, which was super impressive. I did the same thing on the way up, but I learned my lesson, so I actually made 360% profit on the way up, which was absolutely amazing. Shout out to those of you that have been subscribed in all that time. You get a lot more upside when you trade the direction, right? I mean, in this case, the ascending triangle is pushing up. So yes, you can definitely go short on this resistance level. Like I said, 1, 2, 3 points. You could end up probably shorting over here or over here, but you've got limited upside, right? I mean, there's not a whole lot of reward that you stand to gain here, but if you start kind of buying these levels, and I think it gets predictable about over here, a kind of buy that comes in over here, you've got your invalidation probably right below some of these recent lows. That's kind of how I like to set these kind of invalidations. So that's still, a really nice kind of 5x leverage trade. Running it up, that's a 60% gain. 5x leverage against 60% profit is, a 300% gain. So what am I talking about? Is that right? I'm so disgusting at math. It's actually a joke. Let me actually punch this in the calculator. 60 times 5 is 300%. Yes, I was right about it. This is proof that you don't need to be good at math to be decent at trading. But the triangle's absolutely beautiful. They show up all the time. And I mean, the frequency that they actually pop to the direction that we're anticipating, is shocking. It just happens so often. Bitcoin loves to do them with symmetrical triangles as well. Here's an example of a symmetrical triangle where, you kind of usually trend in the direction that you entered the triangle. So in this case, we entered it in an uptrend. So we exit in an uptrend. Over here, we had kind of yet another kind of symmetrical triangle. This one did not break. We kind of entered it in a downtrend. We would have broken down, but that didn't quite happen. So there are definitely exceptions, which you do see printed in these markets. But on the whole, very nice kind of price action. Sometimes you do form these kind of triangles that are more like ascending triangles, and you do pop, but it's short-lived, and you get the breakout. You do still get the breakout, but it just doesn't really materialize. So you got to keep an eye on things like this. But this is actually a very useful pattern in my experience. It's something that we've seen Bitcoin produced many times. We even kind of did it over here. It wasn't super clean, but we kind of had the same thing going on, which was, of course, an ascending triangle. So we're anticipating that kind of 66% breakout to the upside here because we've got our support line kind of trending higher. So that's one of my kind of favorite, and that's why I'm starting the video with that. But there's a whole lot more. Let me enlighten you with a couple others. You know, I've already kind of briefly covered this very, very briefly just now, but we've also got wedges where things end up going quite badly for Bitcoin. And this is actually super, super impressive, right? I mean, we can zoom out and take a look at the same kind of price action that we had back here and just go ahead and kind of draw a very interesting wedge right here that looks a little bit like this, where if we take a look at this market, let's actually throw this back on the logarithmic, you know, we can actually draw a wedge just like this, where we're basically connecting the price action from about over here, looking something a little bit like this, with our kind of resistance line looking a bit like this. And you know, I mean, there's a couple different ways you can draw it. You know, we're not trying to be mega exact. We're just kind of looking for the general point of the wedge, but we're kind of generally intersecting with a lot of our key levels. What we can see is that the price action is kind of tightening, right? I mean, if we were to kind of continue to draw these lines out, it's drawn a lot better here. I don't know why I'm trying to redraw it, but you can see that if you really kind of draw the lines out, you're getting price action that kind of you know, narrows and narrows and narrows as time goes on, and that's actually going to be a sign that the market is getting ready for an explosion. But in this particular case, you know, what it's actually a display of, and this is actually where wedges get really interesting. I can show this to you on a smaller time frame. I don't know why I'm making it so difficult for myself. Let me show it to you over here. This is a really big famous one that I think we were talking about as well when it was happening. A really nice kind of rising wedge here. We kind of slightly covered it just now. You know, what this actually shows us is that, you know, originally the market was you know, showing a lot of momentum, but then that momentum started to die, right? If we kind of take like an average line, a line that kind of averages this price action, it probably look a little bit like this. And if we draw the same line for the previous bit of price action, it looks a little bit like this, right? So if we kind of take them out, we can start to get an idea of like, you know, just a general like view of how the market, and, you know, I mean, we can change the chart. I mean, we don't have to view it like this, right? We can go ahead and, it's not here, bear with me. It's right up here. We can go ahead and look at this with a line chart, right? And, you know, you're broadly going to be seeing the same kind of thing, right? But obviously, we're just going to stick to candles for now. What you can clearly see is that the kind of angle of attack, the gradient, the steepness of our trend up here was much stronger than our trend over here. So the reason that these kind of wedges can actually be quite interesting, and the reason that I tell you this is because I really want you to kind of understand this really deep in your head. You know, I want you to understand this from a logical level. You know, I don't want you to just memorize this or give you some like easy cheat code or something like that. I'm trying to give you the fishing pole and the materials to build yourself a fishing pole in this video. And if you do appreciate that, do me a favor and smash those likes up. The reason that we're actually talking about this in this particular level of detail right here is because this allows you to spot momentum changing, okay? And if the momentum changes, you're going to have a very, very clear view of what might come next in the market, right? Imagine you've got like a torpedo bomb. I always like to kind of use this analogy. And, you know, the torpedo bomb is going to go up in the air. It's going to start curving. It's going to curve a little bit lower. You know, it's going to start looking, take a look at this. I mean, you know, bomb's not the nicest analogy, but, you know, hopefully no one gets too upset by that. You know, it's going to start to kind of level off, and then you're going to see a very, very quick steep drop. And I mean, that is like pretty much bang on exactly if we start moving these pieces back in. I mean, this part didn't really happen. We kind of skipped this one, you know, but then we are just kind of straight into a horrific downtrend here. You know, so typical loss of momentum. That's exactly what these kind of lines are drawn to represent. If I just kind of Command Z everything here. That's exactly what these lines kind of represent, to me at least, is that momentum kind of is super, super strong. It tapers off, and that gives you a sign that we're actually going to start moving down. And, you know, Bitcoin loves to kind of form patterns. I'm actually kind of leading myself into one of the next points here, but Bitcoin loves to kind of repeat itself and rhyme with history. So the same thing happened at this particular market top as well, you know, where we formed a very, very similar pattern in a very, very similar way, you know, and it just didn't quite work out for Bitcoin here. So again, just something to be aware of. And speaking of kind of patterns with Bitcoin, you know, there are certain things that tend to work better than other things at different times in the market. One of those things is just kind of spotting, you know, trends, right? Like this will change from time to time. But one thing which I think is particularly strong in the market right now, and this might change by the time that you're watching this video, obviously, but right now, and we're actually doing it at the moment as well, is that Bitcoin actually seems to really lately move up during the weekends, right? And if I go ahead and prove this to you, we can take a look at every Saturday and Sunday trading session on this market. I'm going to draw this with dashed lines so it's not too confusing, and we're going to lower the opacity so you can really read the chart. We've got Saturday and Sunday over there. We've got Saturday and Sunday over here. The next Saturday and Sunday here. The next Saturday and Sunday here, and then here. And right now we are in a Saturday and Sunday candle as well. And you can see that, on these kind of dashed lines, this is actually where we've seen a lot of kind of upward price action for Bitcoin here. I mean, take a look at this. It's kind of right around these dashed lines that we're seeing some upward price action, especially actually more visible on the daily. And then it's right after these dashed lines every single week that the market starts to sell off. So we're actually doing the same thing right now. And this is not new to us. We've been talking about this regularly on this YouTube channel. And this is something which kind of, we've seen weird discrepancies and weird stuff happening on weekends for some time now because of how, Bitcoin's kind of a much more mature asset these days, and it's much more controlled by traditional finance markets and traditional finance money. However, this is a pattern that, at this level of repetition, at this level of kind of, showing its face, this doesn't happen super often. So I think that it's actually, I don't know how useful it's going to be moving forward, but my point is that these kind of patterns, like Bitcoin loves to kind of rhyme with them and stuff like that, and different patterns are going to be more powerful at different times in the market. And one of the key things you've got to do is actually identify them so that when they actually start taking place, that you can take advantage of that volatility, right? So what I might do now, actually seeing what this market is doing, and again, this could very much change by the time that you see the market, is that I'm anticipating that Saturday, Sunday, we're going to be moving up, which is exactly what we're doing now. So I might anticipate a little bit more upside. But then I might say, now it's going to be Monday. So I'm actually going to be looking for the market to drop, and I might actually see that during that time, Bitcoin has managed to work itself up to a key zone of resistance, right? Because this was obviously an area of support. So I might actually anticipate that it turns into resistance. And, I'm starting to build up confluence here, both with price-based analysis, so just looking at the chart and seeing where support is, or resistance in this case, but also with time-based analysis. And time-based analysis is a lot harder to do for a lot of people because, you just have to think a little bit differently. But in this case, it's pretty straightforward, right? We're just talking about Mondays, Mondays versus weekends, right? And so, when you start to kind of get analysis that is pointing in the same direction to the same conclusion, but it's coming from various different angles, you're using different tools to get there. In my experience, that's actually one of the most powerful things that can happen to you. It's one of the best things that can happen to you in these markets, in my experience, because it does actually enable you to build confidence from a lot of different directions. Just feel confident that, what you're doing is coming at the right kind of place. And again, to kind of translate this into trades, for me, probably stop loss up here at about 62.6. I was actually just demonstrating this on a separate tutorial. But if we come on here onto Blowfin, which is, one of my key exchanges of choice that I've linked down below, like I mentioned, this would be a very simple case of isolated, limit. I would set, an entry basically right in this box. So again, $60,000 flat. I've already got that punched in. And I've already got my money in here. I can just kind of slide this across. I got $1,000 ready to go, and I can slide this across to put in 50% of my money, choose a stop loss at 62,500. That's 32,500. That's a little bit too low. 62,500. Go ahead and press short. And it's going to confirm those details for me. It's going to punch that order in, and I see it on the exchange, right? So that's going to be nice and easy. If I wanted to set myself up with a take profit at the same time, I can just go ahead and do that, right? So 62,500 with a TP at, let's say, I don't know, 55,000, and there was a lot of money, that I kind of stand to make off that kind of position here, which I think is super cool and very much a powerful thing to be able to have access to in this market here. So I'm definitely loving this platform. Many of you guys have been as well, so it's well worth checking out right below that like button if you are enjoying this video so far. But let's carry on because we got a few more bits to talk about, and we are already 18 minutes through this video. I want to talk to you about channels. Now, channels are something else that Bitcoin loves to produce and break out of. Actually, just before I wrap up the wedge, the other cool thing about the wedge is you can actually measure the height of the wedge. In this case, it's 56%, and oftentimes when you break out, you can actually extrapolate a very powerful target. In this case, we had a 56% wedge height from the very beginning, and if we kind of use that to extrapolate a target, it did place us down at $18,000, and obviously with the gift of hindsight, we know that Bitcoin fell down to $15,000. So pretty close, pretty accurate in my opinion. Yes, it missed the last, 10-15%, but really who cares? I think that's actually still pretty impressive. And channels are the same thing. I mean, channels are very, very useful to kind of predict where Bitcoin can go. This was back in 2019. If I go ahead and cast your minds back there, we were just looking at it toward the beginning of the video. If we look at what happened in 2019, Bitcoin entered a really nice kind of parallel channel that we can draw, looking something a little bit like this, right? And, we did have a bit of a fake out. You can draw it to kind of keep that fake out in play or not. There's obviously going to be different ways to draw this. It's going to depend on if you're using the logarithmic or linear. It doesn't really matter. Obviously, you can just right click over here and choose whatever it is. Logarithmics is definitely better. Generally better, I should say, in these markets, but this is going to be also largely based on personal preference. And again, you just kind of measure the height of this channel. In this case, I've measured up about 27%, and that puts me at about 9,900, and Bitcoin topped out at about 10,500. So, we're not getting exact. It's not perfect. The way I measured it over here, it was ever so slightly different, and it slightly overshot the target. But broadly speaking, it gives you really kind of good, easy expectations of what might end up happening when you start to kind of break out above those key levels. And I think that does actually put me in a very powerful position to kind of see where the market could be going. And obviously, when you get these kind of patterns, you just want to get that back test and enter on them, right? I mean, you get the breakout above this pattern. We see that it matures because we're on the daily time frame. We see that it matures after 3 days. We're still above it. And then we come back down for that kiss of life. And that's how the market kind of rallies up. It's the same thing with our wedge over here, right? We kind of break below it. We're on the weekly time frame here. We break below it. We mature. We materialize under this price level a little bit. Find resistance, drop. Find resistance again and drop. And this was the big drop here. The absolute money shot in the market, as they say, where things got quite crazy. So, lots and lots of potential to not only kind of expect where the market can go off these patterns, but also to kind of start looking for entries, because the market does like to backtest these things, right? It does take sometimes a little bit of patience to get there, but the market does tend to do it very, very well. And those are just a few. Those are just a few of the patterns. There are some more very, very powerful ones that I want to show you, but I'm going to have to save them for a part 2. So if you want to see a part 2 of this video, let me know with the comment section down below if you want to see that, and I will happily make that for you guys. I need to know if you guys have actually enjoyed this video. So leave me a comment saying that, smash up those likes, and make sure that you're subscribed if you did enjoy this. I have actually missed out on a few really, really powerful ones that you don't want to miss. So I will be saving them for part 2 of this video. But if you have enjoyed this one, you know exactly what to do. Show this video some love. Take advantage of the thousands and thousands of dollars you're going to get when you start signing up and trading on these platforms. Bybit is going to give you a completely free $500 Bitcoin position, and all you've got to do is sign up and start trading using this link down below. If you're in Europe, you get the Bybit debit card, which is sick because you can spend crypto in the real world. Absolutely great stuff. Check them all out. Enjoy your life. Enjoy your day. Have a great one. I'll see you all in the next one. Cheers.